Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be talking with you.
Taking a look at the BC municipal elections, it seems mayors like Burnaby's Derek Corrigan were voted out because they supported renovictions or had the at least perception that they supported them so they could put up massive gleaming glass towers everywhere and kick out the people who lived in the walk-up 3-story apartment buildings that were there for 30, 40 years. Is this a message that a lot of mayors should be paying attention to?
Well, I think it's a big change. If we were to go back to the 60s and the 70s where governments actually got involved in building housing, because since the late 70s, early 80s, when Thatcher, Reagan, neoclassical economics revolution came in with the invisible hand of Adam Smith, they basically left it up to the private sector to decide what to build. And of course, the private sector has this idea of maximizing profits, and what's profitable isn't necessarily the same as what is needed. So they've concentrated on building mega mansions and also on high-rise luxury condominiums where the profit per unit is the highest, or at least it was up until recently. So for people to actually build a lot of low-cost, affordable housing, it would require the government's getting involved again, and it's a very big change. So it's interesting because it probably won't happen right away. But if people start voting for candidates that say they're going to do this, that's probably the first step in having it happen. But it's quite unfortunate. We have it in Toronto and Vancouver and Edmonton, Calgary, Ottawa. There's a surplus of luxury apartments available. A lot of people can't afford them. They don't really make sense to buy them to rent out, although there are quite a few investors that have done that. And probably the type of accommodation that's needed is something quite a bit different from that. For one thing, the new ones that they're building in the luxury mode are way too small for most families. So it's not clear who exactly the target market was. Young couple, no kids, and then as soon as they decide they want to start a family, then they have to leave that and move into something else. It's basically we wasted a couple of decades in terms of housing in Canada, building the wrong kind of housing, and I suspect now this election is the first sign that we're going to move back to something more reasonable. But I don't know how it's going to work because people haven't really changed that much where they believe that the government throwing a whole bunch of money at a problem is going to solve it.
What about the lack of exit housing for the baby boomers who've had their kids move out? They're in a 4-bedroom house, 2-car garage, and what they want is someplace smaller, 2 bedrooms, maybe 1 car. Nobody's building that for them. They want the luxury, but they don't want the size.
It's interesting. So they're getting back to these luxury condos that they're building. They're actually too small for those baby boomers. Even though the baby boomers are having trouble getting used to the idea of going back to less than 1,000 square feet, and because they're coming from 2,500, 3,000 square feet. And a lot of the space they require when they make that downsizing move is to store all their stuff. but I've been advising my regular business as an investment advisory, and a lot of the clients are older, and it's just really hard for them to get mentally prepared for the idea of giving away all their stuff. So they look around for something that's big enough to have all their stuff and bring it with them, and they're just, as you say, there isn't anything available. And whether it makes sense to build that for them or not, I don't know, but there's a real shortage, and that would be, I suppose somebody who's really smart will buy two of these tiny condos side by side and knock the wall out between them, and then you'd have probably about the right size for a retiring couple. But do they want to live in a high rise? I mean, there's a lot of them that would prefer to have their feet on the ground, and they might just end up staying in their own homes. The other option would be for them to stay in their own homes, and this sounds kind of radical, but to have the kids actually move back in and raise the family in the big home, and then eventually the parents move to the basement or something. I don't know.
Well, it's happening in Vancouver with laneway housing is exactly that. The big house goes to a family, and the retired couple moves into the smaller laneway house.
Well, they're building those now in Edmonton too. They call them garden suites, and I was looking at that, and I thought, it takes a big lot, but there's lots of big lots in the neighborhood I live in. There's lots of big lots, and there's all kinds of wasted space. And really, when people get older, they don't use the full extent of the yard anymore. So that that part of the yard is just a headache to have to maintain. So to put a garden suite or a laneway back there would make perfect sense. And it is kind of if the finances get challenging enough, I suspect people will do that, because everybody I just talked to a couple actually who's lucky enough. They got 3 kids. They live in Vancouver. Their house at the peak was worth $1.9 million. I don't know if it still is, but it's somewhere up there. And they paid off the mortgage, if you can believe it. I was quite shocked, but they're probably getting close to 50 years old, so that's a pretty big accomplishment. But they have another tenant living in their basement. And I thought, well, you don't need that mortgage, the mortgage helper suite. You don't need that anymore. Why do you still have people there? Oh, it's good income, kind of like that. And so I think pretty well everybody in Vancouver has somebody else, some stranger living in their house. So why not? If you get, you might as well have somebody in your family living in your house if you're always going to have somebody living in your house, and rather than having strangers living in your house. So I don't know. I think it's going to happen. I really do. The baby boomer problem and the problem with the millennials not being able to find anything that they can remotely afford, the solution might be to combine some of those. And it's not right for every family, but lots of families probably could do it.
We'll have more with Hilliard Macbeth right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, the Bank of Canada holds its next big meeting tomorrow, and Canadians are quaking in their boots about higher interest rates. A survey came out today saying a third of homeowners are scared of going into bankruptcy if interest rates keep going up.
Yeah, we don't know. This is an amazing situation we're in. We don't know how much stress in terms of higher interest rates people can handle. But I suspect the debt levels are so high in the private sector in Canada. It isn't just households, it's actually corporations as well, that we're going to find out fairly soon what the limit is. And, I don't think the banks like RBC's talked about this and they say, it's not a problem, except maybe in Toronto or Vancouver, but Edmonton and Calgary and other places it's not a problem at all. But then when they do these surveys like the one you're mentioning, I saw one in Alberta a couple of months ago. It was 44% of all the households would be in serious financial difficulty if interest rates went up even 1%. Well, they're obviously going to go up at least 1%, and probably more likely 2%. So I can't imagine that 44% of the people are going to be very happy about that. So it's and the reason is because the debt level. So the economics looks at flows, where when the big banks talk about affordability, they're talking about the monthly payment, which is a flow, money in, money out. But nobody talks about the impact of the total size of the debt. So if the total family debt is over $1 million, any kind of a hiccup, somebody losing their job or somebody having to go back and retrain for a different career, or somebody getting sick or somebody getting pregnant, any one of those hiccups, or there's a recession, that debt level is so large that they won't be able to survive that. So the monthly payment's fine. The monthly payments are only $3,000, and the family income is $5,000. They can do it. It's high. 60% is very high, but they'll manage. But the total debt levels matter too, and none of the measures cover that. So obviously, there's going to be some pretty big problems, and it's really unfortunate. But we're there. There's nothing we can do now but try and figure out a way to get through it. And of course, if the collateral level, so there's two problems. Now the good news is that mortgages don't come up for renewal for 5 years usually on their interest rate. The bad news is there are some people that took out mortgages 4.5 years ago. So there's a bunch of other people that only took out their mortgage 1 year ago, so they've got some protection. But there's also floating rate, variable rate mortgages. It's amazing to me that people were told when interest rates were down at 2.5% that the best deal was to take out a variable rate mortgage. Because I remember in 1990 when the mortgage rate was 13%, people were locking in the rate for 5 years because they were afraid it was going to go higher. So of course that was totally wrong. And I suspect taking out the variable rate mortgage when rates were below 3% was also a big mistake. So we're going to find out, and it's looking at what happened with our neighbors to the south when they got into their financial crisis. It's probably going to be a challenge that's too big for many families.
Well, the advantage Americans have, though, is their mortgage is 30 years. They don't have to renew every 5 or 10.
Exactly, and even then they got into trouble. So the other aspect of it is the value of the collateral. So the law says that the bank is not allowed to renew the mortgage if the collateral value is below the value of the loan. So if you come up for renewal, you got $1 million mortgage, and the house which you bought for $1.2 million is now valued at $900,000. Technically speaking, the bank is probably, although banks have a lot of flexibility on this, but I think technically speaking, they're not permitted to roll over that loan for another 5 years, even if you can make the monthly mortgage payments. But I think if there's enough people that are in that situation, if they're still willing to keep paying the mortgage payments, I think what will happen is there'll be no questions asked. They'll just renew the mortgage without any trouble. It'd be a disaster to try and move the mortgage from one financial institution to another, because then they'd have to go through the whole appraisal process again, and they would find out that they can't give you a new mortgage because the collateral level is too low. So the total size of the debt level in the family and in the economy, and the value of the collateral is going to become a really big factor here. So even if individually every household can afford to make the monthly payments, if the total debt value is too large and the housing values are dropping, people could get into trouble. Now, I'm sure that the government would step in and say, you know what, why are we going after people that are still making their monthly payments? They're going to have so many problems to deal with that they're probably going to let those people alone and leave them alone and just concentrate on the ones that are failing to make their monthly payments.
What happens if you're underwater and you can make your payments, but you can't renew your mortgage? What if they say, no, we can't because your property isn't worth that anymore?
Well, I've already heard stories of people, trying to go back and get renewals, and they ask you to put in more money. And of course, none of these people are going to have the money to put in more money, so they just say, sorry, we can't. And then basically it becomes a default situation, or people try to sell it. And but if it's already underwater on the mortgage, probably there's a lot of other houses that are underwater on the mortgage. That's the problem with this whole housing as wealth idea. It's insane because really the wealth isn't there if people need to sell those houses to pay back the debt. Even if 3 or 4% of the Canadian households, there's about 13 million Canadian households. So 3 or 4% of them, say 1 million households, have to sell because the mortgage is bigger than the debt. Those additional 1 million homes coming on the market are going to devastate the housing market. So it doesn't make any sense to say, well, we've got all this wealth in our house, therefore we can borrow all this money. It's not liquid, and of course they're all going to get into trouble at the same time. And so that's the problem. If it was only 1 or 2 people here and there, then there'd be no problem. That those houses could be absorbed quite easily. But so they'll have to come up with some kind of a program. There'll be some. Obviously there'll be a lot of taxpayers that don't have a big mortgage that'll be very upset if the government steps up with a program to help people, get through this difficult time by helping them with their mortgage. But in the 80s, it happened in Alberta, and people kind of didn't say too much about it. That was when interest rates went above 10%, and if people qualified, they could get the government would pay them a check for the amount of their mortgage payment monthly that was higher than 10%. And so when interest rates hit 18%, some people were getting some pretty big checks. So I don't remember anybody complaining about that, but that was a special situation where it was very unusual that interest rates went up so high, and everybody could sort of agree that, well, that's really not their fault. Nobody could have possibly imagined interest rates going to 18%. But in this case today, I think people might say, well, wait a minute, why did they buy that? Why did they have to buy that $1 million house with an $800,000 mortgage? Nobody forced them to do that, and so maybe they should just live with the consequences of their mistake.
Well, a survey found that 85% of new home buyers maxed out. They bought as much as they could. Was that a mistake? Well,
yeah, and so how did that happen? So I've thought about this a lot, and so you imagine the young couple, and the reason I know this is because I've talked to dozens of them, and it's all over the country. It's not just Edmonton, Calgary, Vancouver, Toronto. I've talked to people all over, and they go and they say they have this idea. Well, we're only going to spend $500,000. That's all we can afford. We got this down payment of $50,000, and then they go to the realtor, and the realtor says, okay, well, we'll look at the $500,000 homes, and they look and they're just terrible, right? Nothing's any good. And then one of the people says, well, didn't the lender at the bank say that we actually could qualify for up to $800,000? And yeah, but we don't want to go that high. And then the realtor says, well, if we could go up a little bit higher, even maybe $750, there's a lot of homes that are much nicer. So whose fault is that? Is it the lender for mentioning the fact that they could qualify up to $800,000, or is it the realtor's fault, or is it the couple's fault? I don't know. I think there's responsibility on all sides there, but the couple has the final decision to make. And when they signed that form for that much debt, there was nobody there saying, do you realize that this is, going to be a lifetime commitment here? I don't think there was anybody standing there warning them about the risks of it.
We'll have more with Hilliard Macbeth right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Hilliard Macbeth. Hilliard, living in the middle of the oil patch as you do there in Edmonton, oil prices are coming down. Western Canadian Select is about $45 less than what the West Texas crude price is. What does that mean for the Alberta economy and in general the Canadian economy, which relies so much on revenue from Alberta?
Well, if it stayed like this, it would be absolutely devastating. Now, I'm told by, obviously not an expert, been living with this since the 70s in terms of in the financial markets, but there's a lot of new stuff here. Changes over 40 years have been huge. And one of the biggest changes, of course, is that we don't have a lot of conventional oil left, so they went to the oil sands plants, which is more of a mining type operation. And the type of product you get out of that is different from the conventional oil that you just drill a hole in the ground. So that's the reason for the big discount. And the part of the reason is the transportation costs are quite high, getting it to market, which is in the southern U.S. where the refineries can handle it. And part of the reason is it's a different kind of product, which gives different, when it's refined, it gives different outcomes, different products through the fracking process. But this is the widest discount anybody's ever seen. The price of Western Canada Select is what it's called. If you want to look it up, it's called Western Canada Select. And it's below $20. And WTI was over $70. Now, today it's down to $65 because of change in the market at that level. And there are some refineries that are set up to handle the type of product that Alberta is pumping out. And it's over 3 million barrels a day, and the total is up, and that goes to the U.S., including products, is close to 4 million barrels a day. By far the largest exporter. Saudi Arabia, for example, is less than 1 million barrels a day, so Canada's more than 4 times bigger than Saudi Arabia in terms of what we supply to the U.S. And some refineries are set up to handle it. So that's the refineries are asking for that type of product. But it doesn't get a very good value because one of the problems with the bitumen is it has to be diluted in order for it to move through the pipeline. So they have to buy the diluent, which is a very high quality liquid that they mix in there anywhere from 10 to 30% of the volume. And that stuff sells for $68 a barrel. So it's even worse than the difference between $66 and $15 sounds, because they're actually paying to mix it with this really expensive stuff as well. So so one of the things that happened when they went on this oil sands plant building spree, going back to the time of Ralph Klein and Jean Chrétien, they made a deal on the royalties. And what the way the royalties work for the government of Alberta is that the firms, the companies get to pay back all of their capital expenditures, and then they get to deduct all of their operating expenditures to arrive at a net profit number, and then the Alberta government takes a percentage of that. Well, obviously at $15 a barrel, there's no net profit, so there's going to be no royalties either. So it's a really, really difficult situation. And you tie it into the housing market. So Canada is the highest household indebted country in the world, and or one of the highest. There might be one other. Australia might be slightly higher. And Alberta in Canada has the highest household debt levels because Alberta's incomes were higher, much higher than the rest of Canada, like 40-50% higher than Vancouver or Toronto. So therefore, they were able to borrow more money. The households were able to borrow more money. So the debt levels in Alberta are much higher. So it's a very, very difficult situation for Alberta, and therefore for Canada, because people don't realize, even though Alberta is only 11% of the population of Canada, the GDP levels and the debt levels and the income levels are more like 20-25% of Canada. And I find when I'm doing interviews in Toronto and other places that there's a lack of knowledge about this matter. They think Alberta's kind of a separate place, but it's all interconnected. And even people in BC know that Albertans are important because Albertans buy a significant amount of real estate in BC when they start to have a little extra money and they get a little older. So all of this will affect everybody. And it's a very difficult situation. I don't know what's going to happen, but and I'm told, the good news is I'm told that this discount is not going to last for very long, because one of the reasons for the discount is one or two of the refineries that specialize in handling this type of crude has been shut down for maintenance. So once it starts up again, they'll be able to sell more of this stuff. But in the meantime, nobody wants it. So that's why the price discount is so big.
And of course, you still don't have that twinned pipeline from Edmonton to Burnaby.
Yeah, that's an extra 500,000 something barrels a day. The Keystone XL pipeline, which has been approved now for a couple of years, is still not finalized. The pipe is all stacked, ready to be installed. and that would be on even a larger amount, like 800,000 barrels of additional oil going to the U.S. That would be probably the best one, the Keystone, because it's just adding to an existing route that's already there, and it goes to refineries that are already taking the Alberta type of crude, the diluted bitumen. And the only thing left is the Supreme Court ruling on the route in Nebraska. That's a fairly short segment of the route, and once that's approved, the crude can start flowing there. So that would be probably the best one, the Keystone. The Burnaby one, I understand the court has ordered further consultation with the Aboriginal community, but they've also said that it has to be concluded by the end of January 2019. So I don't know. I haven't heard anything about how that's going, but maybe that can move forward. But and then there's rail cars. But the right now they've got every railway and every rail car possibly that they can load up with this stuff, and it's only 200,000 barrels a day. So it's really just a temporary situation. And the problem with rail cars is they cost $15 a barrel. So it's not a very good situation if you're only getting $15 for your product and you're paying that much for shipping. It doesn't really work. So pipeline, by contrast, cost $5 a barrel or less. So obviously the pipeline is the cheaper way and also the safer way to go as well.
Hilliard, thank you so much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard Macbeth, author of the new book now, second version of When the Bubble Burst, Surviving the Canadian Real Estate Crash. Hilliard, where can people get it?
They can get it at any of the bookstores like Chapters Indigo, or they can buy it online from Amazon.ca or Amazon.com, and there also is the ebook version as well at both the Canadian Chapters and also the Kindle e-version as well. So it's easy to find.
Hilliard, thanks again.
Thank you.
If you have any questions for Hilliard or any of our other guests, you can send them to info@howstreet.com. Our popular YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.